Hey everybody, it is Friday. You know this because I'm in red like I am every Friday, no matter where I am. I hope you're also wearing red. We now have a way where you can go online and request your own red swag, so check that out on our YouTube channel. Today, I'm going to talk about the pros and cons of the VA IRRRL, okay? Pros and cons. I'm going to give you a little sneak peek. There's a lot more pros than there are cons, but we're going to cover all of those today. As you guys know, our favorite loan here at Low VA Rates is the interest rate reduction refinance loan, or the IRRRL. We like to refer to it as the streamline. And while the pros of the IRRRL significantly outweigh any of the cons, I want to cover both of them with you today so that when you're deciding whether or not refinancing with an IRRRL is in the best interest for you, you can weigh both sides. So to start, let's just hit the pros hard and fast, okay? I'm going to put an S here. We're going to go over the pros, put some bullet points here to keep me in line. Number one, lower interest rate. That is the primary, most positive, most popular reason why people do the IRRRL, lower rates. Newsflash, if you have not heard, because of COVID and all the other unrest in the world and all this political nonsense that's going on, and I say nonsense whether you're left or right or middle, there's a lot of junk going on right now. The only good that's even coming from it, in my opinion, interest rates are at historical all-time lows. That's why so many people are lined up to streamline, and some are going to do it 2 and 3 times over before we get out of this mess, if I had to guess. So, lower rate, fast, okay? That's what streamline kind of means. Fast closings. It doesn't take a long time. Also, no proof of employment or income. Now, I'm going to have to put an asterisk here because of the times we're in. Pre-COVID and post-COVID, this is going to be the case, and this video is going to be around forever. So VA IRRRLs do not require proof of employment or income because the world has changed, because there's a lot of risk out there right now. Low VA Rates, along with every other lender that we are at least aware of at this point in time, is going to want to at least know you're employed, and that's very simple to verify. Almost no additional paperwork. And if you're not employed because you receive VA disability or Social Security or something else, we're going to want to know that you're receiving income. We're not going to ask for how much income. We're not going to ask how long you've been at that employment. So it's still very limited. It's still very fast. Little asterisks for the times right now. Just know that that might not be the case, okay? No appraisal, okay? No appraisal is needed on VA IRRRLs. What else? Well, you could defer 2 payments. 1 to 2 payments deferment, always the case. No payments for 1 to 2 months. Now, why do I use the word defer? Again, we're upfront, honest, and just ethical here at Low VA Rates. A lot of people like to use the word skip. You're not skipping those payments. What happens is they're just getting tacked on to the end of the loan, so that interest is going to be paid at some point, but it's a nice little pause or reprieve to put some cash in your pocket and do something else with. But just know you're not skipping them. You're just deferring them. You could also potentially, almost always, 99% of the time, I'm going to come up here, so I got to bending over, Escrow Refund. And we're going to do some videos, and we have some out there already on what escrow is, but you get a refund. And as it gets closer and closer to the end of the year, right now we're in the fall, we're moving that way. Most escrow accounts are pretty high right now because you've been putting away your taxes and your insurance every single month since January. Look for some pretty large escrow refunds if you can close your IRRRL near the end of the year. Also, no cash due at closing, okay? No money at closing. That is very unlikely for conventional loans. You do not have to have any cash in your pocket, no check at closing, don't have to do that, okay? You don't even have to live in the property, which is so awesome. No occupancy. Okay, no occupancy. You might be thinking, whoa, I thought I had to live in the house to get a VA loan. Well, we've got videos on that. A lot of veterans buy a home, they live there for a couple years or less or more, and then they move, but they keep the VA loan on their home. I've heard so many people say, oh, I never refinanced with a streamline my rental property because I just didn't think I could. Do not make that mistake. Imagine taking your rental property mortgage payment way down right now, still charging the same rent, if not increasing rent as time goes on. Much more cash flow for those veterans that have renters in their property. So you do not have to occupy or live in the property. The funding fee, okay? I'm gonna put less costs, okay? The funding fee is lower. There's other fees that are lower if you're refinancing with an IRRRL, so less fees. There's probably a whole bunch of others, but those are the first ones that come to mind to me as to all of the main pros or advantages of doing a VA streamline. I'm going to dive just a little bit deeper right now into each of these just so you can go a bit further with me. As far as lower rates, look, we've talked about this before. As long as you can lower your rate by a half point or more, then you're going to normally save enough money on your principal and interest to do it. So you might say, Eric, well, what's that mean? I'm at 3.25 right now. Do you have rates down at 2.75 or lower? Right now we do. Now interest rates change daily, so check us out, call us up, and we'll tell you every day what our rates are. But if you're anywhere at 3% or above, I would highly suggest looking into an interest rate refinance loan right now. Fast closings, no point in sticking on this. Like I said, less paperwork, get the refinance closed fast. We talked about no proof of employment or income. That's a no-brainer. It just makes things faster. So we're not looking at your DTI and we're not asking you for tax returns. Even if you're self-employed, that doesn't come up on a VA streamline. No appraisal. Okay, not only is that going to save you less closing costs, but appraisers right now are like 3, 4, 5, even 6 weeks behind. And that's just something that people don't want to wait for because they want that lower rate now. As I've said, if you can defer your payments for 2 months, I know my kids are just starting school here in the fall. School's not cheap. You've got all these supplies you have to pay for, new clothes and new shoes. Just imagine if you're paying $2,000 a month for a normal mortgage payment, that's up to $4,000 that you can go and spend on something else during those first 2 months after your refinance closes. No cash at closing, super simple. That's more money in your pocket. These occupancy requirements that I talked about, already dove into detail on that. Doesn't matter if you live there or not. Get a lower rate so that you can have more cash flow from your renters. The funding fee is less. It's only 0.5%. It's zero if you're a disabled veteran, so it might not even have a funding fee. And even though the VA IRRRL has tons of benefits, we've just gone over them all, there are a few, I don't even know if I want to call them cons, but I will because we like to refer to pros and cons. There are some things that you should understand when you're making a decision whether or not you should do a VA streamline. So let's talk about that short list right now of cons. Okay, let's get into this. The VA has a strict net tangible benefit requirement. Not necessarily a con because that's something there to benefit you, but we've got videos on the NTB, or we'll just call it the benefit test. We've had some veterans recently that see interest rates way down in the low 2s, and they're already in the high 2s, and they want to refinance because they see those billboards and they get those letters in the mail, and we say, well, you can't because you have to drop at least 0.5%. And maybe you can only drop 0.375 or 0.25 because you already have a really low rate. Keep watching the news as the election approaches. I have a feeling personally interest rates are going to go even lower. I would not be surprised if fixed rates are somewhere in the 1s at some point in 2021. The Fed just came out this week and said they are years away from raising interest rates. Guys, I hope the world gets back to normal soon, but it's going to take a while. Interest rates may keep going down, but if you can't drop at least 0.5%, the VA will not let you do this. That's something to keep in mind. Also, no cash back, okay? On an IRRRL, you cannot get cash back. So if you're thinking, well, shoot, I got $100,000 in my house. I just want 10 grand at closing. You can't do that with an IRRRL. You'll have to look at our VA cash out for that. Like I mentioned, because there's no cash back, we've also mentioned there's no cash due at closing and that you can defer some payments. This is interest that gets rolled into your loan and it makes the cost of your loan go up. If you bring cash to the table, the cost of your loan won't go up. But if you're financing your closing costs and you're deferring payments, you do end up paying more interest over the long haul because you're rolling those closing costs into the loan and deferring those payments. Here's another, I don't know if it's a con, but keep in mind, you can only do this IRRRL on an existing VA loan. So we get veterans that call us all the time say they want to do a streamline refinance. They want to do an IRRRL, and then we find out they're in an FHA loan or a conventional loan. There's all sorts of stories and reasons as to why they didn't get a VA loan to begin with, but you can only streamline an existing VA loan. Okay? Now, what's another thing to consider? Not a con of the IRRRL, but something to consider is, let's say you're going to roll $3,000 in closing costs into your loan, but you plan on moving in 6 months. You're going to want to get with your loan officer and just make sure that the costs that you're incurring are not outweighed by the fact that you might be moving or selling your house, okay? So, look, that's most of the cons of the VA loan. I can't think of any others of the VA IRRRL. It's an amazing loan. It's our favorite, and it's true. The VA IRRRL isn't the right solution for every situation, but I will tell you this, it does have way more positive benefits or attributes and a heck of a lot less negative ones. So highly, highly consider an IRRRL. And if you want to find out if it is the right choice for you, you can call us. You can chat us on our website. You can leave a comment under this video. We'll reach out to you. Basically, we want to communicate with you in whichever manner that you feel most comfortable. We're always here. We're always willing to help. There's a huge line of people trying to do streamlines right now, and the sooner you get in that line, the sooner you can take advantage of all of those benefits. I'm going to take cons right off of here. I'm going to put benefits as we end, because really, the IRRRL has a ton of benefits. Call us up. Wear your red next Friday. We'll see you next week at the same time.